Hello guys, today we'll analyze one more stock, and as you can see the name of the stock is VGuard. So this stock has generated approx 39% returns for the investors in last 1 year. The current price of the stock is around 240 rupees and it was down by 3.12% on the last trading day. Now this stock has generated better returns than the FD. It is a good point to enter in the stock and there are no red flags. But the current price of the stock is more than the intrinsic value and it doesn't have good dividend returns. Now the company is into industrial sector, into the electrical components and equipment. It is a small cap having market cap approx rupees 10,339 crores. Stock is low risk because it is 1.92 times volatile as Nifty. When we look at the PE ratio of the stock, it is above 50. But when we compare it to sector PE, the sector PE is around 56. So we can see here that company is undervalued when we compare it to sector. The PB ratio of the stock, however, is 8.50, which is almost double than the sector PB. Also, 61% of the analysts have recommended to buy this stock. Also guys, if you want to see more such videos, then you can like the video and subscribe to this YouTube channel and hit the bell icon for being updated. Having a look at the product portfolio of VGuard Industries, then they have voltage stabilizers, inverters, solar power systems and inverters, electric solar heat pump, water heaters, wires and cables, fans, also kitchen appliances, pumps, domestic switch gears, modular switches, air coolers, water purifiers and other products also. Looking at their revenue segmentation, we can see that 28% of their revenue comes from electronics, 44% comes from electricals and 27% comes from consumer durables. When we have a look at the manufacturing facilities, then in total they have 6 manufacturing facilities in India, which are in Himachal Pradesh, Uttarakhand, Sikkim, 2 in Tamil Nadu. So we can see that they have occupied north, east and south portion of the India. Still they need a manufacturing facility in the west side. While if we look at the geography wise revenue breakup, then 58% of the revenue comes from south portion of India, while 42% comes from non-south. Having a look at their financial performance in the last 5 years, we can see that their revenue is consistently increasing. Even the EBITDA is improving and it has improved from the previous years. Same goes with profit after tax, it has improved from the previous years. Having a look at ROE, then their current ROE is around 16.5%. ROC is 22.2%. The debt to equity ratio is zero and it has remained zero in the last 5 years, and their net worth is consistently increasing. So these figures are quite impressive. When we look at their operational performance, then this dark yellow portion is the revenue coming from the south side, the portion of the total revenue. We can see that it was 67% in FY16, but it is only 58% in FY21. So we can see here that revenue has started coming from the non-south portion of India, which is a very positive sign for the company. If we see expenditure on ad as percentage of sales, then only 1% of the sales amount is spent on ad. So we can see here company is able to save lot of money in marketing. Now having a look at the shareholding pattern, then promoters have holding around 57%, corporate bodies 0.21%, banks, NBFCs and other institutions approx 14%, FII approx 15%, and retail investors and other parties 13%. So now having a look at the past earnings growth, then company has grown their earnings at an average of 7.4% in the last 5 years, which is exactly similar to industry. But in last 1 year, company has been able to grow their net income by 61%, which is a lot more than the industry. So we can see here that company is able to outperform the industry in the last 1 year. This is the chart of V-Guard Industries on a 1-day time frame. So we can see here that there was a support for this stock at the level of 254, and this level was acting as the resistance earlier, but then in the month of May stock managed to cross this level and then started acting as the support. But recently stock broke this support and is currently trading below the 50 days moving average also. Now I can find another support for the stock at the level of 218. So if somebody is already invested in this stock, I think they can continue being invested. But if someone is looking for a fresh entry, then I believe either they should wait for the stock to come at this next support of 218, or they can wait for the stock to cross this resistance of 254. And if stock manages to cross this resistance and sustains at that level, then they can look for a fresh entry. Now guys, this was all from this video. If you found the content helpful, then please don't forget to like the video and subscribe to this YouTube channel. Thank you.